Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Good afternoon. This is Yonit Levine from the ISC. I just wanted to thank everyone for joining us this afternoon. We're very pleased to have with us again Jack Crooks, founder and president of Black Swan Capital, an independent advisory firm specializing in foreign exchange and currency markets investing for retail and institutional investors. Jack is going to be talking about different dollar scenarios, relative growth, major risk, or just muddling through. With nearly 20 years experience in the currency, equity, and futures markets, Jack has held key positions in brokerage, money management, trading, and research. Jack uses both quantitative and qualitative approaches to determine the fundamental driving forces behind the movement of the currency, capital, and commodities markets. Jack is also the co-editor of the Black Swan Currency Strategist and Black Swan's free daily e-newsletter, Currency Currents. Jack also founded Ross International Asset Management, a discretionary money management firm specializing in global stocks, bonds, and currency asset management for retail clients. Previously, he was general manager of Plexus Trading, where he specialized in currency futures and commodities trading. He also served as chief currency and future strategist of M2 Futures, an investment boutique headquartered in Chicago, as well as vice president of global strategic research for an international investment boutique. Jack has written extensively on the subject of global currencies and international economics, and he's been published in the Asian Times, Futures Magazine, Barron's, Bloomberg, Dow Jones Newswire, and across many other major financial websites. He's also appeared on Bloomberg TV, CNBC, and Fox Business News. So I'm just going to turn it over to Jack.
Thank you, Lynette. Appreciate it. Hopefully everybody can see the slides okay. Let me see if I can do a share the desktop and give you a better look at this, see if that might be better. Okay. And I'm going to talk about today just these various dollar scenarios that are in the market. Just going to take a look at, some of the scenarios that really you've heard about, but we're going to delve into, give a little more nuance to them. Just want to make sure everybody can see the slides okay. If you can see those okay, could you just type a yes into the question box just so I make sure, because we've had some trouble with these slides today. Great, thank you. As I said, what we're going to do today is just go through these various scenarios, and I think these are most of the ones you're familiar with, but again, bring some nuance. The interesting thing is right in here where the dollar is, there's definitely a most favorable scenario in the market, but there's, even with that scenario, which is kind of the weak dollar policy or implicit weak dollar policy from the U.S. government, and this idea that the U.S. is now becoming the funding currency, and I'll talk about this, the carry trade currency of choice, that still has some problems, and we'll talk about that. But without any further ado, let me just get going. And I'm going to try and get through these fairly quickly, and hopefully have plenty of time at the end for questions. I think that's really the payoff is for me, actually, getting your questions and the great questions and the challenging questions, and hopefully for you can clear some of these things up as we go along, because in this market at this time, there's not a lot clear to me, based on valuations and things. This is very much a momentum market. So when you try and overlay some of the fundamentals in a market like this, you get yourself in trouble, as I have in here. So please feel free to fire out the questions, and I'll get to them at the end. First, a disclaimer there related to options, and then this is just a disclaimer, general Black Swan disclaimer. So now we're all disclaimed. First, to look at what this ISE, FX options product is about. If you're not familiar with it, if you are not familiar with it, you can go to fxoptions.com, a great website by the ISE, plenty of education and training on each one of these. But just in quick view of these things, all the major currencies, the 6 major currencies against the dollar, are traded here. And recently the ISE has added some additional currencies, the Mexican peso, New Zealand dollar, and the Swedish krona to the list. So you really have a great across-the-board choice here of currencies to trade at the ISE on the FX options product. The beauty of the product is, for the retail investor, is you can trade this in your regular stock brokerage account. You don't need any special Forex or futures. They trade on a relatively small size. They're about 1/10 the size of the CME currency futures options listed on the Chicago Mercantile Exchange. So that makes it nice too for the retail investor. You don't have to pump a whole lot of capital in to take a position in the currency markets using these options. There are transparencies right there. You can see these through your regular internet account. They're cash settled in US dollars. The European style exercise, that just means they can't be exercised until the end of the contract. It doesn't mean you can't trade those in and out any day. And traded as spreads, or traded just as you would any currency options. The ISE did a great job of making this product look very much like a stock option. The premiums are same as a stock option would be. So it's a very easy product to trade. If you're familiar with options, you'll be familiar with these. The only key difference, of course, is the underlying. And that's what I'm here to talk about a bit, is how these things move and what are some of the major thematics in the market to maybe help you take a position or clear your head or give you some validation of your views and maybe give you some position ideas. Just to start out with, I've shown this chart a lot, and I think it's important if people haven't seen it. This is a long-term chart of the U.S. dollar index in black. And in red, the overlay there is gold. Just to give you some perspective here on what gold and the dollar do against each other on a long-term basis. When I say long-term, this is back from 1971, 1972 time frame forward, and that's really when the currency market started. All of the options, or what are called derivatives, futures, and options, are based on the underlying, which is the spot currency market or the interbank market or the cash market. It's called a lot of different things, the interbank market, because the real cash market in foreign exchange is traded on the desk of bankers around the world. They make the market. The major market is made by the major money center banks around the world. There's no physical location for the underlying or the spot FX. You trade the derivative on this on the ISE.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.